Hello, everyone. It's been a little while. I do apologize for that, but we are back, and I've got a really great guest today. And I'm going a little, kind of veering off a little bit. I usually get some, blockchain enthusiasts, crypto nerds, and everything. But I've got somebody from the traditional side of real estate, which I think we need to kind of balance this out. His name is Danny Waddell, and he is with CrossCountry Mortgage. Welcome, Danny.
Hey, Piper. Yeah, thanks for having me.
We're at such a weird turning point right now in not just real estate, but in the banking industry and in crypto. We're just kind of at this weird crossroads. First of all, introduce yourself to everybody and let us know what you do specifically and your background and all that.
Yeah,
fun
I'm
stuff.
excited. I agree. I couldn't agree more. There's so much going on in the economy and real estate and how is everything. I mean, gosh, what a day to have this too, right? There's just so much happening. So, anyways, Danny Waddell, I am with CrossCountry Mortgage. We are a residential mortgage bank, but we also broker with 40 other banks nationwide. So people often ask me, well, are you a mortgage banker or are you a mortgage broker? And the answer is yes. We are a hybrid lender. So CrossCountry is a mortgage bank where we do mortgage financing for ourselves, but then we also can work with 40 other banks nationwide. So I can really find the right fit for every client. I truly believe that if I can't get a loan done, it just can't get done just because we have so many resources. So that's a little bit about me. I have a finance background of over 10 years. I've been with CrossCountry specifically for 3. And yeah, I love it. I love who I work with. I love the clients I get to partner with. I love the real estate partners that I get to work with. So yeah, I'm excited to dive into some conversations today.
This is great. And the reason I think why we make a good fit is because, when our initial conversations, when we were having martinis one night, is that you kind of service the younger crowd. I mean, I'm sure you service everybody, but there is a younger generation who most of them hold crypto.
Yeah, it's so true. And most people my age, millennials, do have some form of diversity of assets, and some of that is also in crypto. And it's funny how scared they are to show me that. Oftentimes, when I take an initial loan application, they're like, "Here's my retirement, here's my savings account," and I'm like, "Is there anything else?" And they're like, "No, I don't think so." And I'm like, "Okay, let me ask specifically, any investments?" And they skirt around it, and it's interesting how afraid we
So
have
funny.
conditioned the millennials to be of disclosing crypto to traditional banks, especially if you're looking to buy a home in the mortgage industry.
I get calls from especially realtors who say, "Hey, my lender said that I can't do this. I've got a crypto client. My lender said that there's nothing I can do. My escrow company said that there's nothing I can do, but you've done some, so help me."
Yeah.
So and then I kind of silo them off into, whatever their specific needs are.
People that have been in the mortgage industry for a long time, us on the lending side, have a stigma against it as well. They haven't dug into the guidelines. They haven't really done the research to find out what traditional conventional loans allow, right? Because we know crypto's not
Mm-hmm.
going anywhere. We know it's a fluctuating market, and so there have been allowances on the conventional government mortgage side. Fannie Freddie has specific guidelines that do allow certain types of crypto income. So yeah, again, I think this is a great podcast, but it is important to work if you do want to use any kind of crypto with a lender that kind of understands those guidelines probably a little bit better. Some mortgage people are just going to say, you can't use it. And I think it's just because they don't
Mm,
understand it themselves.
they don't know. Right, exactly. So let's, without getting too far into those, what are those guidelines? Let's outline those a little
Yeah, I
bit.
think the most important thing to keep in mind is that the bank always wants to see real assets and where those real assets came from, right? I think that's the most important thing to make sure we understand. So, for instance, if I had 10 grand and I bought crypto with that 10 grand, and then that 10 grand grew over time because my crypto's gone up, and I can show the bank, hey, this is where the money came from. I bought crypto with this 10 grand, and the bank can use those funds and the interest of those funds. But the thing that gets sticky is if you start to mine crypto, because the bank can't
Mm,
track that. That's not a real asset, or the bank doesn't consider that a real asset because it came from, the blockchain came from nowhere, essentially. And
right.
so the bank looks at that and says, well, we can't do that. So what's important in any type of transaction that you want to use crypto for is that you just be able to track it and what we call source it, right? We want to see the sources. Where did the roots of this money come from? And if you can show us, I had 10 grand, I put it in the market, the crypto market, it grew over time. Now it's worth 20 grand. Okay, we can use that. But where we get sticky is if you blend your traditional funded crypto account with mined coins as well. If you have one
Mm,
account that has both, and the bank says we can't use any of it, right? The bank just flat out says it's a blended account, like we can't use any of it. So I think it's important, and I actually would love to know from your expertise how you view that, because I often tell my clients or advise my clients, if you can set up two separate accounts for your mining coins and then your just standard investment from your own cash pocket account, if you can separate those, that's going to serve you better in the future from the traditional conventional lending standpoint. But I mean, what have you
mhm.
experienced? Is that even a realistic expectation or thing to ask?
Well, no, I'm actually learning a little bit from you because most of my clients have just been strictly investors, and they have capital gains, or they, or say like in 2021, there was a huge run up, and all of a sudden they've got enough for a down payment in LA, and so that was like a huge thing. Whether and now they can afford a house, so a lot of calls I was getting was like, well, wow, what can I do with this? And I really don't work with a ton of minors, or if
Hmm.
I do, I don't know, but I'm starting to kind of get into that a little bit more, because it's becoming more of a thing, and it's becoming way more accessible to people, and especially who are very bullish on crypto. So no, I'm going to absolutely take that and advise them, because there is another bull run coming, and in the next 12 to 18 months, we think, because of the halving, and where it's cyclical. There's about a 4-year cycle. We're in the belly of the bear right now, but we're going to come right back out of it, and it's, if the math is correct, it's supposed to be bigger than before. So, and that's when we're going to get a ton of calls, and we really need to have our ducks in a row to be able to advise these
With the
people.
instability in our economy, specifically in banking, I can't see how crypto is not going to be a place where some people find a safe
Yeah.
harbor. With the most recent bank failure of First Republic, with Silicon Valley Bank before that, there's a few more that, I mean, I don't have a crystal ball. I can't predict what those are going to be. Although we kind of see some writing on the walls with some banks. I can't imagine that going back to crypto is not going to be somewhere that we find some logical reprieve from this.
I totally agree. It is still being used as a hedge, against, the banking system. And that was kind of the idea in 2009, for all intents and purposes. And it was not just that, but, the peer to peer, and, being able to have control over your money. But, in the real world, there's got to be some kind of a marriage between the banking institutions and crypto, because not everybody is a whale. Not everybody has, a gazillion
Totally.
dollars in Bitcoin. They didn't all invest in 2009, like I probably should
Yeah,
have.
yeah. What do they say? My
Right.
biggest
But yeah.
my biggest regret in
Uh,
2008 when I was in high school was not buying 12 foreclosed properties or something.
right. Exactly. And I say that, I talk a lot on the subject. I'm like, God, I remember kind of surfing the web in 2009, and maybe I saw an ad or something, or, just like one of those little sidebars, on a website, and it said Bitcoin. And I was like, what the hell is
Yeah.
this? And it's like it's a different means of paying for that. Like, what
I
is
can buy a
this?
Tesla
And I
with
just
this,
kind of,
or a
yeah,
Ferrari or whatever it
exactly. Or
was.
yeah, Ferrari,
Yeah,
Lambo.
or the
Oh yeah,
Lambo. Yeah,
well,
that's what it
yeah,
was.
my The Lambo. Yeah, it's a whole other story. But yeah, I mean, that was kind of like the crown jewel of like, oh, I made it in crypto. I got my Lambo,
Yeah.
Um,
But
so
going
yeah,
back to conventional guidelines, a lot of banks
yeah,
want to see what we call sourced funds, like I talked about earlier. And so, what a
yep,
lot of mortgage professionals will advise the client to do is to cash out your crypto and then put it in just a regular depository account, their bank account, their savings account, and then
hmm
keep it there for two full statement cycles before they can actually make an
yes,
offer on a house, right? You hear people say it all the time, which you can do, of course, because the bank is only going to ever ask for the last 2 months of your bank statements. So where the money came from before that, the bank might not ask for, although they do have the right to ask for it. The underwriter, which is the final decision maker for the bank on a loan, the underwriter could say, I want to see one more month, right? They could ask for that. They don't often do that, and
hmm
guidelines only state they have to ask for two, but they could. So some mortgage professionals will just say, "Well, just put it in a savings account, wait 2 months, and then you can start shopping," which would work. But also, there are guidelines that do allow people to use their active crypto accounts as long as they can show that the initial deposit for the entire account came from an asset account to establish that balance, right? That the funds weren't
yeah,
mined, that the coins that you own didn't come from any type of blockchain or mining or any of that. It just came from I had an investment, I threw it in there, and then you had said something the other day that kind of triggered, or sorry, not the other day, but just a few minutes ago that triggered my brain as well. If on your taxes at the end of the year you file capital gains, that's called a Schedule D. On your tax returns, right? There's a bunch of schedules. Schedule C is for self-employed borrowers. Schedule E is for rental properties. Schedule D is for capital gains. So when you sell a stock or when you sell an investment, you have to claim capital gains. If you have a history of doing that over the last 2 years of tax returns, we can actually average your Schedule D income and use that to help you qualify for a home as well.
ooh,
So, yeah, it's just an
wow.
additional source of income that if you can, continue to do this year after year and claim it on your taxes, we can use that income.
That's so great. I love
Yeah.
that. You're giving me all kinds of ideas too. So I'm so glad I'm here talking. Now, I'm gonna talk about probably a competitor that is actually no longer as of the last week or so.
Like yesterday, as of Sunday, which was
Yeah,
2 days
like
ago. Well,
yesterday.
depending on when people
Yeah,
are
I guess
listening
so.
to this
I'm like,
podcast, it might have been a week ago. But
right.
yeah, as of like
Yeah, I know, right, right.
less than 48 hours ago. Oh my gosh.
Oh my God. I know. It's like things have happened so fast. So what I was doing, back in the bull
Yeah.
run, because everybody would seem to have like and crypto is notorious for this too. I feel slightly better because like, recognized banking institutions are doing this. So you can't like put the blame all on crypto. Everybody was over leveraged.
Hmm.
Everybody was over leveraged. Not everybody. People who weren't smart about it were over leveraged. And this particular bank was over leveraged apparently. But I was sending a lot of my crypto clients there who had, enough for a down payment. They weren't requiring a seasoning period. They said, hey, come bank with us, open up an account. We can, we don't have to season your funds. We can have them ready to lend on in 24 hours and done and
Yeah.
done. And people were all over that. I don't know if that's ever going to come back maybe in the future, but not right now,
Right.
So, my biggest advice and probably yours too, is like, if you want to leverage your crypto, you can't lend on the crypto. You've got to cash it out and lend on the fiat, but you got to plan ahead at least 2 months ahead.
Yeah. First Republic Bank, they did a great job in the mortgage industry for a long time. There were a lot of clients that went to them because of their flexible guidelines. And I don't want to. I've never worked for First Republic. I've never worked with First Republic. I can only speak secondhand to what my clients have experienced, and they were
Mm-hmm.
a great lending institution. And I know some of the best lenders and people in the business that I know worked for First Republic. So I'm interested to see kind of what is next for them now that JP Morgan
Yeah.
Chase has kind of acquired all of the assets and debt from First Republic. Um, but I do know that they were over leveraged. I know that they were kind of not following all of the guidelines and holding a lot of their debt on their own balance sheet, which is why they were allowed to make the rules that they made. So when they said, "Oh, we don't have to season funds," things like that, I think is kind of gotten the best of them. And not only that, but they were giving very, very, very good interest rates on their mortgages.
Yeah.
If someone held any kind of asset or deposit account with them with like 100 grand or 200 grand in it, they were willing to bend over backwards just to get the depository dollars. I think that they were at the end, they're really trying to just rake in as much capital as they could. So, it's I'm thankful. We're all thankful, right, that JP Morgan Chase is going to make true all depository dollars. So if you had a depository account there, it sounds like you're going to be fine. But yeah. But
People actually getting their money back. That's amazing.
exactly,
That would be
yeah,
great.
yeah. But I'm interested to see
Yeah.
because you, we're not talking politics, and I don't want to step into that money pool. But JP Morgan is the biggest bank, period. And then they just became a
Yeah.
little bit bigger. And so I'm interested to
Yeah.
see how that's going to affect the overall banking economy, because the idea here is not to allow the big dogs to get even bigger and their bites to become bigger. It's to so anyways, there's a lot of like
Yeah.
fallout that I'm
Yeah.
interested to see how this is all going to trickle down.
Yeah. Oh my gosh. Right. And so yeah, let's kind of turn to the
Yeah.
economy, interest rates.
One of the biggest
All goes back
things,
to real
yeah,
estate.
one of the biggest things, and
Yeah.
if there's anybody listening, if there's any kind of platform, if there's kind of message I could want to relay to people, we're expecting the Fed to raise the Fed fund rate again today. And what I
Ooh,
hear from clients, and Piper, you probably hear too, is, oh my gosh, mortgage rates are going to go up, right? Everybody thinks that
yep.
mortgage rates are tied directly to the Fed fund rate, which is just not true. I'll say that one more time. Mortgage rates are not tied to the Fed fund rate, people. The feds are increasing the Fed fund rate, which increases variable interest rate products, right? Like home equity lines of credit, credit cards, anything that has a variable interest rate will be significantly affected by the continued rise of the Fed fund rate. Mortgage rates are tied directly to inflation, or in a very roundabout way, and not to get into the weeds too much, but as we see
Mm.
inflation come down, mortgage rates will come down as well. So the feds are raising the Fed fund rate to make it harder and more expensive for people to spend money. Because if you know that your credit card is now at a 25% interest rate when it used to be at a 15% interest rate, you're going to think twice about buying Starbucks every day, right? Well,
Hmm.
I probably won't, but some people would.
I probably won't either, but
Yeah.
yeah,
Oh,
yeah,
yeah.
I'm a sucker.
An addiction is an addiction. Anyways, but
Yeah.
um, so as they stop trying, as they encourage people to stop spending, they're hoping inflation will come down, and that's the goal of them continuing to raise the Fed fund rate. Now, I think they've overbaked the cookies at this point. I think that they are making too many adjustments way too quickly, and they're not waiting just to let the dust settle. It takes at least 6 months of an economic cycle to see the effects of a decision, and so far the Feds have just boom, 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 raise rates, instead of just kind of waiting. But like I said, I
Mm.
think the cookies are pretty much charcoal at this point. Um, so I think that this next raise of interest rates, and there may be another one in June, we'll see. We're really hoping not. But I think as inflation starts to come down, and all the economic data is showing inflation coming down, mortgage rates will come down as well. So we're hoping by this summer, and all the mortgage economists are predicting that by June, July, and August, we're going to see low 5%, maybe even high 4% again. Um, and stop me if you jump, but what's going to be hard about that is that 3 years ago in 2020 and 2021, we had millions and millions of home buyers. You remember the bloodbath, Piper? It was like,
Oh God,
yeah, like
yeah,
40 offers on every house and
yeah,
stupid contingencies, no loan, no
getting
appraisal.
beat up, right?
Right.
Yeah, and yeah,
Well, all of those home
I was going to say
buyers,
that buyers were getting beat up, and now they're getting beat up again in a different way.
well,
But
yeah, no, you're
yeah,
totally right.
yeah,
But all
yeah.
of those people just pushed pause. They didn't go away. As soon as rates started to climb, everybody was like, okay, hold on.
Yeah.
I'm going
Whoa,
to, they
right.
didn't go away. So the market has been pretty, slow with buyers. But as soon as rates come down, all of those people are going to come back into the market, and it's going to be a bloodbath again. And so what I'm telling my buyers is, guys, interest rates are a little bit higher. I understand that, but there's not as many buyers in the market right now. So there's less
Mm-hmm.
competition. So if you can buy a home right now under reasonable terms, because the competition is not as hot as it was 2 years ago, get into that home, marry the home, date the mortgage. As soon as interest rates come down, we can always refinance you. If rates do come down to the 4% again, we can refinance you later. But if you can get the home right now at a reasonable price under reasonable terms, like lock that house down, marry that house,
Right.
but date the mortgage. You know
Yeah.
what I mean?
Yeah. Love that. I love that
Yeah.
advice. Oh my gosh. Okay, so back to crypto investors. So really because of just all the craziness that's going on, with the banking, and again, we're in a bear market with crypto. People are just kind of holding on to their crypto right now. But again, there's going to be another run up, and it's probably going to coincide with everything else. That's the run up that we were just talking about just now, and we're going to be like pulling our hair out again. Trying to service all of these different clients. Um, the option that I'm hearing right now for people who really only have enough for a down payment is just gotta wait it out a little bit. You gotta cash it out. Think about the capital gains and how we can, kind of, this never financial advice coming from me, but I always say, talk to your CPA, talk
Yeah,
to your
yeah,
lender.
yeah. Me too. Yeah.
Yeah. But that's really the only. I don't want to say the only option, but it sounds like it's the only option
I
right
think
at
what's
the moment,
important
just
for
cashing out
people to
and waiting.
remember, and I just talked to someone yesterday about this because they were, I do home equity lines of credit as well, and they
Mm-hmm.
were like, well, we're not sure that we want to close on this home equity line of credit because there are fees associated with setting up that type of account. And again, to your point, we're not CPAs, no financial advice given here. Don't come after us, but I hope that this will trigger someone to call a CPA, an accountant, someone, because a lot of the fees and interest when you buy a home are tax deductible. So if you need a way to
Yep.
offset your capital gains or any kind of losses or any kind of income that you took, if you buy a hard asset like a home and you go to file your taxes, there are significant tax advantages to owning a hard asset, whether that's raw land or whether that's a home.
Yes.
And so, my client yesterday, when I kind of broke that down, of like, hey, I understand that there are fees associated with this, but he told me that he had a pretty different situation where he was going to potentially quit his job, and or at least start a self-employed venture that he was thinking about, especially for self-employed borrowers. Buying hard assets and having those tax deductions and benefits are
Mm-hmm.
so important. So if someone's like, oh, I don't want to take a loss, I mean, talk to their CPA, because they might need that loss to offset income or other types of income that they've claimed.
Yeah.
So I don't know if that
Yeah.
helps, but I couldn't agree with you more on that.
And you my CPA, I am my crypto spreadsheet is, God bless him, because that was a lot of work this last year. But I didn't realize how many fees I racked up just trading. Because I'm not the one. I don't sit there and watch what the gas fees are looking like. I just, like, if I want to swap something or if I want to cash out, I just do it, and I just which is probably not the smartest thing to do. But I racked up a ton of fees, and just moving the money around, and those can be offset as well. So people who move crypto around a lot, be smarter than me, but at the same time you can still
Well, and
deduct
I
those.
think too, to
you
your
know
point,
yeah.
as the mortgage industry is becoming more familiar with crypto, I think that the accounting industry, same way. Like, you have to find a CPA that understands crypto, that understands the
Mm-hmm.
benefits, what you can and can't write off, and what you can and can't claim, and capital gains. Like, it's so important to work with someone that is an expert in crypto in
Oh,
all
yeah.
fields, right? In real estate, like, you got to have that agent that understands what you're doing. You got to have the lender. You got to have the CPA. Like,
Mm-hmm.
you need a team of
You
experts.
have to have a
Yeah.
team. Yeah, I cannot stress that enough. And and look, we're getting to the point now where you can't avoid it. If you're a CPA, if you're an agent, you're a lender, you got to
Yeah,
know a
even
little bit,
financial advisors, a lot of, and
Oh my God. Yeah.
I don't mean to be ageist at all, but like a lot of people that have not that have been in a financial advisor pre um, crypto don't even, they're like, why don't I
Hmm.
don't want to touch it. I've been doing this for
Yeah.
30 years. I'm not going to, but then there are people that are re-educating themselves or newer to financial planning market that are just knocking it out of the park because they understand the pros of investing in crypto right now.
Yeah.
You know what I mean?
Oh, absolutely. Yeah. And I can attest to that because I love my financial guy. He's wonderful and he's been with me for years. And, but yeah, he's been around the block a few times. And, when we first met, I said, yeah, I'm into crypto. And he was like,
Yeah.
oh.
Yeah.
And he was like, forget it. And now I'm like, look, dude, like we've got a call set today because I'm like, I'm tired of watching my stock portfolio take a dive every day. I kind of know what I'm doing when it comes to crypto. I'm going to take part of my portfolio and put it into crypto because my stomach gets sick every time I see my stock portfolio.
Yeah.
But that's just me,
Yeah.
So I need to diversify a little bit more. So yeah.
And he was probably like, oh
Um,
gosh, that evokes fear in him. But it's a funny, it's interesting as
yeah.
humans, right? Like how we are afraid of what we don't know, so we avoid it. That fight or flight comes in,
Oh, big
and
time.
so because we're not
Hmm.
educated in crypto or educated in this new investment strategy or opportunity, a lot of people just avoid it because it's scary, And it's like it's
Yeah.
not that
Yeah.
scary if you just dive in and take some time to talk to someone who understands it, that can help you with it. It actually could be a huge opportunity, but it's just, as humans, just what we do.
Yeah, yeah, and I'm never on the bandwagon to try to get people on it, and try to sell them on crypto. But I just I if people are like, hey, I might want to take a look at this. Okay, great. You need to talk to somebody who is very knowledgeable about crypto. And actually, I had a good friend, from jobs past when I was in the entertainment industry, DM me a couple months ago. He's like, I really want to get into crypto, but there's so much BS out there. Like, where do I even start? So I'm like, here, look at this newsletter, read this person, like ignore anything that says
Yeah,
Forex.
yeah.
And like, if anybody says that they're the crypto king or queen, I'm like, run away. There's just so much crap out there, but yeah, I mean, you have to be very diligent because it's still the Wild West. And I welcome some kind of regulatory
Okay,
framework. That's
interesting.
what we
Interesting.
need. Yeah. I mean, not, not to where, it's going to be rendered useless. I'm praying that doesn't happen. But if there's more clarity around, digital assets, then it might be a little bit more friendly in the traditional arena. And there's
Well, it
that,
will for
that
sure open
marriage of,
doors in the lending area
yes.
if there are
Yeah.
regulations around it. I think that, it's seen as the wild, wild west of opportunities and investments, which is why banks are so like haphazard about it. But I agree with
Hmm.
you. I think that some regulation, I mean, it's gonna come just because it, just naturally that's the way that we're seeing things go. But I'm interested to see like what regulations are going to come down, how it's going to affect us in lending, all of that. It'll be an interesting next couple of years.
Yeah. Yeah. So pay attention, man.
Yeah, yeah,
Not
yeah.
you, everybody
But
else.
yeah, from the
Yeah.
conventional
Gosh.
mortgage side of things, we just want to know where the money came from. We want to source it.
Hmm.
We want to just be able to always know. That's the biggest thing. We just need to track it, right? And crypto is just
Yeah.
like any other investment. You put money in, it goes up, it goes down, you take money out.
Yeah.
It's just like any other investment. And we can treat it like that as long as that is
Hmm.
all came from. And I think, too, it's important to know that if you are going to use crypto funds, expect to be, you know, paperworked, right? Like, we are going to ask for a ton of paperwork going back to when you first opened your account. And anytime you've made a deposit into the account, they're going to want to see a transaction history of that. So
Yep.
expect to be paperworked, Um,
Yeah. And you're going to
yeah.
have to. There's no way around it. And even, sometimes I get calls from people, hey, if I did a wallet to wallet, which we can
Yep.
do, my escrow company is set up to do these things. Can I skip the taxes? Can I skip? No, you can't, because it's like they've got to be able to do what they call KYC. And if you don't know about that, it's know your customer, where they dive in to your history. They look at the wallet, they look at the behavior of that crypto wallet to make sure that funds aren't going to blacklisted countries
Right.
and whatnot. They're still going to have to do that due
Right.
diligence because nobody wants to get dinged for this kind of
Right.
thing. And there's a lot of traditional rules that still apply. You still have capital gains if you're going to, if you made a ton of money in Bitcoin and you want to buy a house in Bitcoin, how much did you make? Great, you bought this house, but there's still, again, talk to your CPA. But yeah, I mean, there's still things the hoops that we have to jump through in order to get this done. And we just to kind of tag along on that, we had a sale in Puerto Rico. I had a partnering agent there, and there was a guy that where we were advertising it for crypto or cash or whatever, and the guy came along and said, "Hey, I want to pay Ethereum for this." Great, we're going to have to do some KYC, and he's like, "Oh, nope, not into that," and so he cashed out and bought it. But then again, at the same time, I'm like, how did they not? Like, they're still going to have to source those
Yeah.
funds. So I don't, like all the Puerto Rico agents took care of that, but I'm like, hey, whatever it takes. But I don't know how that ended up happening at the end of the
I love that
transaction. So
language,
yeah,
KYC. I'm going to use that
yeah,
because, I have a client,
yeah.
we're closing on their loan today, and I asked them for bank statements. So, why do you ask me for this bank statement? And I'm like, because we need to know our customers, and I'm going to use that language. So I'm learning from you today
Yeah.
too. Thank you. Yeah,
Hey,
thank you.
so yeah, this is a good
Yeah.
partnership. All right, well, so this has been great, Andy. Any final thoughts, before we kind of sign off here? And how can people get a hold of you?
Yeah. So, you can always reach out to me. My email address super simple. It's Danny dot my last name Waddell, WADDELL at CCM as in CrossCountryMortgage.com. Yeah, any questions you have. I think, people always ask, when is the right time to get into the market? And I think the answer to that is when you're ready. Any time is the right time to get into the market, but you have to be ready. And to get in a position to know that you're ready, you have to talk to a lender. That's got to be your first stop. Working with someone that you trust, that's going to walk you through the process, and that's really going to run the numbers for you before you start making those offers. So, yeah, I think I would just leave it with that. Reach out. I'd love to help with anything that I can. I service all 50 states. So it's not that I just lend here in
That's a
California.
huge
Yeah,
plus.
yeah. So I
Yes.
am able to help no matter where anybody's listening in from. I work a lot in all 50 states, so not just here in California.
Fantastic. Thank you so much, Danny. I really appreciate it. We'll have to have you on
Thanks for
again,
having me.
when things kind of
Yeah, thanks for
change.
having me, Piper. It's yeah, you're
Absolutely.
wonderful. Let's grab martinis again soon.
Anytime. Anytime.